Good morning to all the third BCom computers and general students. Subject is banking theory and practice. Today in this class, I'm going to explain you the important questions as well as answers unit wise. I selected unit wise 2 questions and answers for your revision. I'll be sending the remaining important questions also later on. But today's class I am explaining you 2 important questions as well as answers from selectively from first unit. So I request you all to concentrate on the class because this is very important answer for your final examination from unit 1. Okay. So we are from which unit I am explaining today is I am explaining from unit 1, that is about the commercial banks and banking system in India. The first question is, discuss the role of banks in economic development of country. Which banks? Commercial banks. How these commercial banks are helping for the economic development of the country, and analyze briefly the various functions of commercial banks. It is very important and compulsory question for your final examinations. I request all the students to note down if possible the question and then start learning the answer because the exams are going to appear very fast. Meaning of the commercial bank, first and foremost definition. A commercial bank is a kind of financial institute which carries all the operations related to deposit and withdrawals of money for the general public, providing loans for investment, etc. These banks are profit making institutions and do business only to make profit. You are able to understand the last 2 lines. Last 2 lines clearly they are giving the meaning of commercial banks. These banks are running the business only for earning the profits. That is only for the sake of financial business these banks are started. Commercial bank is a kind of financial institution which carries operations. Which operations are related to deposits and withdrawals of the money? Regarding the deposits and the withdrawals from the public. This is the meaning of commercial banks. Please note down the meaning and a continuation also the role of commercial banks. Commercial banks play a significant role in fulfilling the short-term and medium-term financial requirements of the industries. They do not provide long-term credit so that the liquidity of the assets should be maintained. So first 2 lines, what they are saying, these commercial banks are lending the loans only for short-term and medium-term. They are not providing long-term credit. Why? Because cash will be moved away. The liquidity means the liquid cash, whatever is available in the bank, may move away out of the bank and there will be a problem for day-to-day transactions. That is the reason it is not interested, showing interest for the long-term credits. The funds of the commercial banks belongs to general public and are withdrawn at a short notice. Therefore, commercial banks prefer to provide credit for long term period, and commercial banks prefer to provide credit for short period of time backed by tangible and easily marketable securities. Suppose they are interested to give for the short period and the long period, medium period means what they are saying, they are checking appropriate securities. Correct securities are not there or not, it is checking and then it is going to give the short term loans as well as credit for short period for tangible, visible assets only it is giving, and they check out what is the market rate of that security, then they give the loan. Commercial banks, while providing loans to business, consider various factors such as nature and size of business, financial status and profitability of the business, and its ability to repay the loans. While providing the loans to the business, consider various factors. What factors it is checking when it is giving the short term period loans also? It is checking what is the nature and size of the business, whether it is a legal business, illegal business, first point. Second point is what type of business it is. Okay, how much it is, very tiny, small, medium or big business. These two it is going to check. Financial status, how much investment or how much capital they kept in this business, how much profits they are earning from this business, and how far they can repay the loans if we give the loan to this particular business. So they are checking the nature, they are checking the size of the business, they are also checking the financial status and the profitability of the business, whether the capability of this person who is taking the loan for short term can repay the loan or not. They are going to check, then they are going to give the loan. Clear? Next, commercial banks. When you talk about these commercial banks, especially are of how many types? Three types of commercial banks are there. First and the foremost point is what? Public sector bank. Second one is private sector, and the third one is the foreign sector. So first we are learning about the public sector bank. What is public sector bank? According to the definition of this syllabus is, refers to a type of commercial banks that are nationalized by the government of a country. In public sector banks, the major stake is held by government. You are able to get the point here. Public itself is telling that it is nationalized. It is under the control of the government. Majority of the investment as a capital in this bank is by Government of India. In India, public sector banks operate under the guidelines of Reserve Bank of India. So how these banks are working? These banks are working according to the guidelines of Reserve Bank of India, which is a central bank. Some of the Indian public sector banks are State Bank of India, Corporation Bank, Bank of Baroda, Dena Bank and Punjab National Bank. So some examples are also given here. The first and the foremost example of the public sector bank is State Bank of India, Corporation Bank, Bank of Baroda, Dena Bank and Punjab National Bank. It's clearly understood to you, I think, that a public sector bank is majority of the capital is invested by the government of India, and they strictly follow the guidelines given by RBI, which is also called as a central bank, and these are the examples of public sector bank. Next bank when you go for it is private sector bank. It is a bank referred in which major part of the share capital is held by private business and individuals. These banks are registered as companies with limited liability. Some of the Indian private sector banks are Vaishya Bank, Industrial Credit and Investment Corporation of India, that is ICICI Bank, and Housing Development Financial Corporation, HDFC. So private banks are the second part of the commercial banks, and these banks, majority of the share capital is sponsored by the public or by the individuals, means it comes in the private sector. These banks are registered according to the Companies Act under the limited liability, okay, under the private sector, and he also gave the examples. Vaishya Bank, ICICI and HDFC are few examples of private sector banks. Next one is foreign sector. Refers to banks that are headquartered in a foreign country but operate branches in different countries. Some of the foreign banks operating in India are Hong Kong and Shanghai Bank Corporation, HSBC, Citibank, American Express Bank, Standard and Chartered Bank and Grindlays Bank. In India, since financial reforms of 1991, there is a rapid increase in the number of foreign banks. Commercial banks mark significant importance in the economic development of the country as well as serving the financial requirements of the general public. So, what is the meaning of the foreign bank? The bank which is having the headquarters in the foreign country and which is operating from remaining all the countries, but operates branches in different countries. So some of the, of course, the investment also will be according to the companies, people who are investing in this, the shareholders. So Citibank is one of the example, HSBC is one of the example, okay. Next, HSBC full form is given here, Hong Kong, Shanghai Banking Corporation, next Standard and Chartered Bank, okay, the Grindlays Bank. Since reforms of 1991, reforms in 1991 means LPG model. What is LPG model? Liberalization, privatization and globalization. Okay, according to these reforms, many after these reforms, what happened? Globalization has been started. What is globalization? Business out of boundaries. So external trade has been increased in India, and it got some trade restrictions towards the business. Because of this, many of the foreign countries started investing and entering into the boundaries of India and started doing the business. Along with these, the banking sector also entered in Indian land, foreign sector banks. I repeat, commercial banks are of three types. First and the foremost bank is what? First one is public sector bank, second one is private sector bank, and the third one is a foreign sector bank. So for the public sector bank, what is the example? State Bank of India is one of the best example. For the private sector bank, ICICI is the best example, and for the foreign sector bank, HSBC is one of the example. So let's see the functions of commercial banks. So the functions of commercial banks are of two types, that is the primary functions as well as the secondary functions. So in this PPT I am explaining you about the primary functions of commercial banks. Refers to the basic functions of the commercial banks are as follows. First and the foremost is what? Accepting deposits of the customers, advancing and granting loans, overdraft facilities, collection of money, purchase and sales of securities, safe deposit wallet, dealing in foreign exchanges, discounting of bills of exchange. I repeat, how many functions are there? And the primary functions of commercial banks is accepting deposits of the customers, advancing and granting loans, overdraft facilities, collection of money, purchase and sale of securities, safe deposit wallet, dealing in foreign exchange, discounting of bills of exchange. Agent accepting deposits, there are two types of deposits. One is demand deposits and the time deposits under the commercial banks. Next, bond deposits. If you see, demand deposits refers to the kind of deposits that can be easily withdrawn by individuals without any prior notice to the bank. In other words, the owners of these deposits are allowed to withdraw money anytime by simply writing a check. These deposits are the part of money supply as they are used as means for the payment of goods and services as well as debts. Receiving these deposits is a main function of the commercial bank. So demand deposits, it is a deposit. What is the meaning of the deposit? You are keeping some lump sum of amount fixed for a certain period of time, but it is a demand deposit. Demand means what? Whenever you require, you can withdraw the amount. So that is the main thing here. So what you do when it is urgent, it is compulsory, it is mandatory, and you don't have any cash available in the market and no sources of the financials available, means then you are coming to this type of deposits, or else you are not touching these deposits. So these deposits, whenever you are in demand, by using a checkbook, you can use this amount. Next, time deposits refer to that are no for a certain period of time. Banks pay higher interest on time deposits. These deposits can be withdrawn only after a specific time period is completed by providing a withdrawn written notice to the bank. So time deposits means the fixed deposit which you kept for 3 years or 4 years or 5 years or 10 years depending upon your time limit. Okay, so here the rate of interest is going to be high for this time deposits. You can take the amount when you are in need of, but it should be given notice to the bank, then only the bank should accept, then it should give the permission to use this money, or else there is no such type of adjustment to give the money whenever you are in need of. Okay, this is the first point what we dealt. Next one is advancing loans. Refers to one of the important functions of the commercial banks. The public deposits are used by commercial banks for the purpose of granting loans to individuals and business. Commercial banks grant loans in the form of overdraft, cash credit, and discounting of the bills. Advancing loans means what? Giving loans. The main business of the bank to earn huge profits is giving the loans only. First thing is what? Overdraft. What is the meaning of the overdraft? If you are a salaried employee, what is the point? If you are a salaried employee and you are getting at least minimum amount, maximum amount is 30, minimum is 30,000. If suppose you are receiving 3 times to this, you can take the loan. Means 90,000 rupees. The bank is going to give the loan to you without any security. your salary certificate only is acting as a security, as well as employer of your organization should give the security. Then you are going to get the loan on your salary, which you should repay within 1 year. So that comes under overdraft. Cash credit. Your loan is going to be credited in your account. So suppose you took 1 lakh loan and you used only 10,000, means for this 10,000 only the bank is going to charge a rate of interest. Remaining 90,000, as you use accordingly, it is going to charge the interest, but not for the amount what is there in your account. Discounting of the bills, especially this is used for the business persons who purchase the goods on credit. For that people also the loans are advanced under this. So advancing loans are of 3 types here: overdraft, cash credit, and discounting of the bills. Next, primary functions. It accepts deposits. Just now I said you the same point is repeated. A commercial bank accepts deposits in the form of current, saving, and fixed deposits. It collects the surplus balance of individuals, firms, and financials, the temporary needs of the commercial transactions. The first task is therefore the collection of the saving of the public. The bank does this by accepting deposits from its customers. Deposits are lifetime of the banks. It gives loans and advances. The second major function of the commercial banks is every bank's main responsibility is giving the loans and the advances. There is a fact that main source of the income of the bank. A bank keeps a certain portion of the deposits with itself as reserve and gives the balance of the borrowers or loans in the form of cash credit, deposit loans, short-term loans, overdraft, as explained under. Cash credit, I repeat the point, an eligible borrower is first sanctioned a credit limit, and within that limit he is allowed to withdraw a certain amount on a given security. So eligible borrower, a person who is having the security for his salary and he is a salaried employee or a business person. For him the credit is given, it is credited in his account. The withdrawing power depends upon the borrower's current assets. The stock statement which is submitted by him to the bank as a basis of security. Interest is charged by the bank on the drawn or utilized portion of the credit. Last point I repeat you. What is telling the last point is how much amount is credited as a loan by the bank into your account. In that, how much you are using, for that only it is going to charge a rate of interest. It is a clarity given here. Next, demand loans. Already I said you, when you are in need of loan, means for the deposits, you are taking that. A loan which can be recalled or demand is called as a demand loan. There are no stated maturity. The entire loan amount is paid lump sum by crediting into the loan account of the borrowers. Those like security brokers whose credit needs fluctuate generally take such loans or personal security and financial asset. Short-term loans are given against some security as personal loans to finance working capital or priority sector advances. The entire amount is repaid either in one installment or in number of installments over the period of loan. You can pay installment wise or you can pay at a time. Secondary functions, discounting bills of exchange or bundles. A bill of exchange represents a promise to pay a fixed amount of money at a specific point of time in future. It can also be encashed earlier through a discounting process of commercial bank. Alternatively, a bill of exchange is discounted acknowledging an amount of money owned in consideration of goods received. It is a paper asset signed by the debtor and the creditor or fixed amount payable on a fixed date. It works like this. So what is happening? A small example I will give you. A business between A and B. A sold goods to B and B purchased the goods on credit, and B purchased to pay the amount after a certain period of time. So B could not pay the amount on a specific date. So when B could not pay the amount on the specific date, the return letter which is given by B can be submitted by A in bank. So on behalf of B, the bank is paying the amount. But it is not going to pay the complete amount. It is going to deduct some 10% or 12% according to the rules of the banking sector. It is going to deduct the amount and then it is going to pay to the A, the person who give the debt. So this type of process called as a discounting of bills. Okay, I gave you example here. Suppose A buys goods from B, he may not pay B immediately, but instead give B a bill of exchange stating the amount of money owed and the time when A will settle the debt. Suppose B wants the money. Immediately he will present the bill of exchange hundi to the bank for discounting. The bank will deduct the commission and pay to the B the present value of the bill. When the bill matures after a specified period, the bank will get the payment from A. Overdraft. An overdraft is an advance given by allowing a customer keeping current account to overdraw his current account up to an agreed limit. It is a facility to a depositor for overdrawing the amount that the balance amount is discounted. In other words, depositor of the current account makes arrangements with the banks. Agency functions of the bank. The bank acts as an agent of its customers and gets commission for performing agency functions as under transfer of funds, collection of funds, payment of various items, purchase and sale of shares and securities, letters of reference. So bank is doing some special functions to its customers. Transfer of fund from one account to other account, it is immediately transferring the amount. Next is collection of the funds. It is collecting on behalf of its customer also. It is collecting from the other person. Payment of various items. It is paying the electricity bill. It is paying the LIC amount or EMIs. It is paying on behalf of its customer. Automatically deduction. Purchase and sale of shares. Any sales and shares and securities are for sale means it is going to give the immediate information to its customer. These type of shares are available with this price. Okay, letter of references. Okay, the letter of reference also it is going to submit on behalf of its receive on behalf of its customer. General utility functions are also there. The banks provide many general utility services, some of which are transfer, travelers check. The banks issue travelers checks and gift checks. Locker facility, the customer can keep their ornaments and important documents in the lockers for the safe custody, for which the customer should pay yearly some amount to the bank for the safe deposit locker. Underwriting securities issued by the government, public or private bodies, purchase and sale of foreign exchange currency. These activities on behalf of the customer, the banks are doing. Traveler's check, the person who is moving from one country to other country, from one place to other place, in place of carrying the cash, he is carrying the traveler's check, which can be carried very easily and which can be encashed the place where they reach. This type of facilities are given for its customers specially. Scheduled banks, if you come for, commercial banks are classified into two broad categories, scheduled bank and non-scheduled banks. Scheduled banks are those banks which are included in the second schedule of the RBI, that is the Reserve Bank of India. A scheduled bank must be paid up capital and reserves at least rupees 5 lakhs. RBI provides special facilities including credit to the scheduled banks. Some of the important scheduled banks are State Banks of India, Subsidiary Bank, Nationalized Bank, Foreign Banks. In easy terms, I'll tell you what is scheduled bank. Scheduled bank is a bank which is controlled by RBI and which is having the share capital of 5 lakhs rupees. It should work only for the country's depositors. It should satisfy all the customers living in India. Non-scheduled banks, the banks which are not included. First scheduled means which are included in the second schedule of RBI. Here which are not included in the second schedule of the RBI means they are known as non-scheduled banks. A non-scheduled bank has paid up capital and reserves less than 5 lakhs clearly. Such banks are small banks and their field of operation is also limited. Very small banks are there. That banks comes under non-scheduled banks which does not enter into the second schedule of the RBI. Clear? So, thank you students. I request all the students that very important long answer I explained you from first unit. It is compulsory answer for the final examinations. Please note down and revise the answer. Thank you. Thank you very much.